So if we were to return to a gold standard today so that the dollars were backed proportionately by the same amount of gold that they were backed by in 1971, right? We would have to revalue the gold price above $80,000 an ounce. That just shows you how badly the dollar has been devalued ever since we severed the link to gold. And to go back on a gold standard would require $80,000 gold. That would be the new price, right now at $2,600. So gold has a long way to go if we are to ever go back on a gold standard. Now, the people say, well, why be on a gold standard? Just be on a Bitcoin standard. The Bitcoin standard isn't going to work, but the government is no more likely to want to go to a Bitcoin standard if somehow it had to have Bitcoin backing all of its money, because the government doesn't mind create Bitcoin either, just like it doesn't create gold. It has to get the gold, but it's not going to move. We're not going to move to that standard. That's absurd. There's a cost here that everybody is overlooking. We're struggling. Americans are up to their eyeballs in debt now. They can't afford the processed food that they're eating. They're putting that on a credit card. So where's the money going to come from to have everybody eat healthier food? Right? No one talks about any of this. Now, yes, could we save money in the long run on our healthcare costs? Sure, but potentially. But in the short run, prices are going to go up at a time where people are already struggling with the prices we have right now. The same thing with this deportation of the illegals, which now, we're talking about, are we going to have an emergency, executive order, or, how are we going to start deporting all these illegals? And, sure, it's great on the campaign trail to talk about, getting rid of the illegal aliens, right? Because, sure, people aren't supposed to be breaking the law to come into the country, right? You're criminals, right? If you're breaking the law. And when times are bad, and which they are bad, right? For most people, times are bad. That's why Trump was elected. That's why I said he was going to get elected. It's always easy to blame the immigrants for the problem, right? You look for a scapegoat, right? The immigrants are taking your jobs, right? The immigrants are committing the crime, right? Just bash all the immigrants. Now, I'm not saying that there aren't immigrants that are committing crimes. Of course there are, but there's plenty of crimes committed by native-born Americans, right? Immigrants coming in and going on welfare, yeah, but so are native-born Americans, right? So either one of them is bad as far as I'm concerned. But, it's very easy to bash the illegal immigrants, especially when so many of them have come in, right, under Biden. And the ones that have caused problems are the ones that are on the headlines, right, when they kill somebody. But there are a lot of illegals that don't make the headlines because they don't break any laws. They're actually breaking their backs doing a lot of hard work. And so if we're going to just go out there and get rid of the illegals, we're going to be getting rid of a lot of people that have been contributing to society, right? Yeah, if we were only going to get rid of the criminals, yeah, that's a no-brainer. Let's get rid of the rapists and the murderers and the people that are just living on welfare. But that's not how it works. We end up getting rid of a lot of people. Speaking about food, a lot of those workers in farms helping to grow food. Now, what happens if they're not there anymore? Who are we going to hire to replace them? Very difficult to hire a lot of legal Americans. They don't want those jobs. The government gives them a better deal. So in order for the farmers to get the labor, they're going to have to offer much higher wages, which might be, okay, that's good for the Americans who get those higher paying jobs. But now the people who buy the food, they're going to have to pay much higher prices. Now, one of the reasons that Trump was elected was because people were fed up with paying high prices and they wanted relief. Well, they're not going to get relief if, the farms are forced to hire much more expensive labor.
Peter Schiff, a name synonymous with economic foresight and candid analysis, paints a vivid picture of the challenges we face in our modern economy. At the heart of this dialogue is a pressing concern: the silent yet devastating erosion of the dollar's value and the systemic consequences for Americans. Schiff's insights shed light on the intricate web of economic policies, social challenges, and monetary realities that underscore the importance of gold and silver as timeless assets. The economic struggles of the average American are stark. Credit card debt has ballooned to an astonishing $1.7 trillion. A testament to how deeply entrenched the reliance on borrowed money has become. Schiff points out that many Americans can no longer afford even processed food, resorting to credit cards to sustain basic consumption. The rising costs of living, coupled with stagnating wages, form the foundation of a precarious economic structure. Now add to this the debate around healthier diets, immigration policies, and potential deportations, and the picture becomes even more complex. The cost of adopting healthier eating habits, while potentially beneficial in the long run, comes with immediate financial strain. Processed food, though detrimental to health, remains an affordable option for struggling families. Transitioning to healthier diets without addressing the root causes of economic inequality may only exacerbate the burden on households. Similarly, discussions around deporting illegal immigrants might sound appealing on the campaign trail, but overlook their contributions to society and the economy. Schiff astutely notes that many of these individuals are integral to industries like agriculture. Removing this labor force would force farmers to hire legal workers at much higher wages, driving up food costs further. This inflationary ripple effect would directly impact the same struggling consumers who voted for change. Amid these economic challenges lies a deeper question. Where is the dollar headed? Schiff reminds us that when the U.S. abandoned the gold standard in 1971, it severed the anchor that disciplined government spending. The dollar, once backed by tangible assets, became a fiat currency subject to the whims of policymakers. Since then, the money supply has increased by a staggering 8,500%. The price of gold, though significantly higher than its official $42.22 valuation, has not kept pace with this explosion. For the dollar to return to a gold standard today, Schiff estimates that gold would need to be revalued at over $80,000 per ounce, a sobering reflection of the dollar's devaluation. Gold and silver, in this context, emerge as more than mere investments. They are hedges against the systemic risks of fiat currencies. Schiff dismisses the idea of a Bitcoin standard, highlighting the impracticality of relying on a digital asset that governments cannot create or control. Unlike Bitcoin, gold has a proven track record of preserving wealth across centuries. Even today, gold mining remains a challenging and expensive endeavor, with costs often exceeding $1,600 per ounce. Despite this, the market price of gold is still modest relative to the sheer volume of money in circulation. Schiff emphasizes that the gold standard was not a failure. Instead, it was the government that failed to adhere to it. The gold standard acted as a fiscal disciplinarian, preventing reckless spending and unbridled debt accumulation. When market forces began to discipline the U.S. government in the 1960s, demanding accountability for deficits, the government abandoned the standard rather than curbing its excesses. This decision marked a pivotal moment in economic history, allowing debt and government expansion to spiral unchecked. For investors, Schiff's analysis serves as both a warning and a guide. The current economic climate is rife with uncertainty, making gold and silver indispensable tools for preserving wealth. These assets offer a hedge not only against inflation, but also against the broader systemic risks posed by fiat currencies. In an era where the dollar's purchasing power continues to erode, holding tangible assets like gold and silver is not just prudent, it's essential. Schiff's critique extends to the broader implications of government policies, highlighting how economic mismanagement disproportionately affects the average citizen. The luxury of wealth preservation through gold and silver is not merely an option for the elite, it is a necessity for anyone seeking financial stability in uncertain times. Schiff's message is clear. The sooner individuals recognize the importance of hedging against monetary instability, the better prepared they will be for the challenges ahead.
When we left the gold standard, in 1971, Nixon had devalued the dollar twice. It was $35 an ounce. And there were a couple of devaluations before we actually, cried uncle and just closed the gold window. But the official gold price is still $42.22. That's what's on the books. Now, the market price of gold is a little bit better than $2,600. It's actually been rising here last couple of days. It was up about $50 yesterday, up another $20 today. So right now we're about $26.35, but we're still well off the highs that we hit before Trump. We got closer to 2,800. We got 2770-ish. I forget exactly where we were. The market price of gold is a lot higher than the official price. Now, since we went off the gold standard about 1971, the money supply has increased by about 8,500%. I mean, 22 trillion or something like that. So we've had an explosion in the money supply that has far outpaced the increase in the gold price. So if we were to return to a gold standard today so that the dollars were backed proportionately by the same amount of gold that they were backed by in 1971, right? We would have to revalue the gold price above $80,000 an ounce. That just shows you how badly the dollar has been devalued ever since we severed the link to gold. And to go back on a gold standard would require $80,000 gold. That would be the new price, right now at 2,600. So gold has a long way to go if we are to ever go back on a gold standard. Now, the people say, well, why be on a gold standard? Just be on a Bitcoin standard. The Bitcoin standard isn't going to work, but the government is no more likely to want to go to a Bitcoin standard if somehow it had to have Bitcoin backing all of its money, because the government doesn't mind, create Bitcoin either, just like it doesn't create gold. It has to get the gold, but it's not going to move. We're not going to move to that standard. That's absurd. But it also shows you the argument that, well, gold, it's all a monetary premium. It's not. Gold is trading for, barely above the cost of, mining it still. Yeah, finally, we got, a few $100s. It costs a lot of these gold mining companies $1,600, $1,700, $1,800, $1,900 to mine an ounce of gold. And they're selling it for, $2,600. So it's not a hugely profitable business yet, because gold is still ridiculously cheap relative to the supply of money that exists. But it shows you what the government was able to do once it was no longer disciplined by gold. That's why the government has grown so big. That's why the debts have grown so large, because what was preventing all that was removed. And the Bitcoin crowd says, see, that's an example of gold's failure, because gold failed to do its job. No, gold did its job perfectly. It was the government that failed to stay on the standard. The government went off the gold standard and the courts allowed it. The public allowed it. While we were on a gold standard, government was held in check. Now, yes, we started to veer off that in the 1960s with the war on poverty and the Great Society. And then the market tried to discipline us. Europeans, de Gaulle in France, started to ask for their gold back, right? So the market forces were going to work. They were going to rein in government spending and excess deficits. Otherwise, we would have lost all our gold and the dollar would have imploded. But rather than obeying the market forces, we just abandoned the gold standard. That's not a failure of gold. That's a failure of people, men, women. It's a failure of government. The government refused to adhere to the gold standard because the gold standard was doing exactly what the founders wanted, which was limiting the ability of the government to expand.
Peter Schiff's analysis on the broader implications of economic policies and the role of gold and silver is as relevant as it is thought-provoking. His insights paint a vivid picture of the economic crossroads we face today, urging investors and everyday citizens to reevaluate their financial strategies. Let's delve deeper into his arguments and expand on why gold and silver hold a central place in the narrative of financial security and economic resilience. Schiff's commentary on the fiat currency experiment highlights a critical flaw in modern monetary policy. By decoupling the dollar from gold in 1971, the U.S. government essentially untethered itself from fiscal discipline. This shift allowed for unchecked monetary expansion, which has since eroded the dollar's purchasing power. The stark reality is that the money supply has ballooned by over 8,500% since 1971, while gold has lagged far behind in relative valuation. Schiff's estimate that gold would need to be revalued at $80,000 per ounce to restore the same proportional backing it had in 1971 is a wake-up call to anyone underestimating the extent of the dollar's devaluation. This massive monetary expansion has not occurred in a vacuum. The consequences are visible in the everyday struggles of Americans, from skyrocketing credit card debt to the unaffordability of basic necessities. Credit card debt hitting $1.7 trillion is more than a statistic. It's a glaring indicator of an economy where people are forced to borrow just to maintain a semblance of normalcy. For many, this borrowed money goes toward essentials like food, further highlighting the unsustainable nature of our current economic system. Gold and silver, in contrast, stand as bastions of stability in a sea of monetary instability. These precious metals have a long history of preserving wealth across centuries, making them indispensable assets in times of economic uncertainty. Schiff's emphasis on gold's role as a hedge against inflation and currency devaluation resonates deeply in today's financial climate. Gold's ability to hold its value over time is not just theoretical, it's a proven fact supported by historical data. During the 1970s, for instance, gold surged from $35 to $850 per ounce as the dollar lost 75% of its purchasing power. This was not a speculative bubble, but a natural response to the systemic risks posed by fiat currencies. Fast forward to the 21st century, and the dynamics remain strikingly similar. Between 2000 and 2010, gold prices increased sevenfold, reflecting its resilience amid economic turmoil. Today, with gold prices hovering around $2,600, the stage is set for another potential bull market. Central banks worldwide have been accumulating gold at unprecedented rates, signaling a lack of confidence in the dollar and other fiat currencies. This trend is not limited to a few nations. It is a global phenomenon that underscores the universal appeal of gold as a store of value. Silver, often overshadowed by gold, is equally deserving of attention. Its unique dual role as a monetary asset and an industrial commodity positions it as a versatile investment. The global shift toward renewable energy has significantly increased the demand for silver, particularly in the production of photovoltaic cells for solar panels. This industrial demand, coupled with its monetary appeal, creates a compelling case for silver. As renewable energy initiatives gain momentum, silver's importance in the global economy is set to rise, potentially driving its price to new heights. Looking ahead to 2025, the outlook for gold and silver is overwhelmingly positive. Analysts predict significant price increases for both metals, driven by a confluence of factors including inflation, central bank policies, and geopolitical uncertainties. Conservative estimates place gold at $4,000 per ounce by 2025, while more optimistic forecasts suggest it could reach $5,000 or even higher. Silver, which often outpaces gold in bull markets, could climb to $50 or $75 per ounce. Fueled by both industrial demand and monetary factors, these predictions are not merely speculative. They are grounded in observable trends. Central banks have been buying gold at record levels, with countries like China and Russia leading the charge. This accumulation reflects a broader shift away from dollar dependency, a trend that has significant implications for the global financial system. The creation of a gold-backed BRICS currency, as discussed in international forums, is a tangible step toward reducing reliance on the dollar. This de-dollarization movement is not just a geopolitical maneuver, but a rational response to the risks associated with holding dollar-denominated assets. The potential for a return to a gold standard, while unlikely in the immediate future, remains a topic of debate. Schiff argues that the discipline imposed by a gold standard is precisely what governments fear, as it would curtail their ability to spend recklessly. Yet the growing accumulation of gold by central banks suggests that the metal's role in the global financial system is far from over. A revaluation of gold, whether through market forces or policy decisions, could fundamentally alter the economic landscape. In this context, Schiff's warnings about the fragility of the U.S. economy take on added significance. The weaponization of the dollar through sanctions and trade restrictions has alienated many countries, prompting them to seek alternatives. This erosion of trust in the dollar is not merely a diplomatic issue, it has direct economic consequences. As foreign demand for U.S. Treasuries declines, the government faces an uphill battle to finance its growing debt. This dilemma is further exacerbated by rising interest rates, which increase the cost of servicing existing debt. For individual investors, the message is clear. The time to act is now. Gold and silver offer a pathway to financial security in an uncertain world. These assets are not just hedges against inflation, they are safeguards against the broader systemic risks posed by fiat currencies. In an era where the dollar's purchasing power continues to erode, holding tangible assets like gold and silver is not just prudent, it's essential. Schiff's critique extends beyond economic policies to the broader societal implications of monetary mismanagement. He highlights how economic inequality, fueled by inflation and currency devaluation, disproportionately affects the middle and lower classes. The luxury of wealth preservation through gold and silver is not merely an option for the elite. It is a necessity for anyone seeking financial stability in uncertain times. The potential for significant gains in gold and silver is not just an opportunity, but a call to action. As Schiff often says, history has shown that those who fail to prepare are destined to bear the brunt of economic instability. In a world where fiat currencies continue to lose value, holding tangible assets like gold and silver is not just a strategy, it is a necessity. The current economic and geopolitical uncertainties make it imperative to hedge against systemic risks. Gold and silver are not merely commodities. They are lifelines in a fragile financial ecosystem. Schiff's analysis serves as a timely reminder that the challenges we face are not insurmountable, but they require foresight, preparation, and a willingness to adapt. As we navigate these turbulent times, the wisdom of history and the enduring value of gold and silver offer a beacon of hope. These timeless assets remind us that while the economy may be cyclical, the principles of sound money and fiscal responsibility are eternal. For investors and citizens alike, the path to financial resilience begins with recognizing the value of these precious metals and acting decisively to secure a stable future.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.